Hey guys, today I want to show you a setup that proves wrong the fact that trading has to be complicated. This is a super simple setup that anyone can follow. And I use this constantly, or I'm on the lookout for this constantly in my trading. And I think anyone who's looking for simple trades should use this setup. What I'm talking about is the Tweezer Bottom. And I'll show you the setup here on this whiteboard first. And then I'll show you what it looks like on a chart. But one of the big things with this trade is you are looking at a very small risk for a high reward. Because what this often does is catch the bottom of either a pullback or the bottom of a sell-off. And then you get a nice move to the upside after this setup completes. So let's run through what it looks like again here, and then I'll show you examples on a chart. The first thing you need is a downtrend, right? If we're looking for something to be bottoming, then you need a downtrend, right? If we're looking for something, a topping pattern, you have to start with an uptrend. So the first thing you need is a downtrend. What you're going to usually find is a red candle like this that has a wick that goes down and touches a certain price. And the next candle, all right, and this is a generally something I'm using on a 2 or a 5 minute chart. It does work on a 15, an hourly, and a daily chart. I'm just looking for it a lot more intraday on a 2 minute chart, but it works on all of those different charts, in all those different time frames. This, which you should recognize from my video on candlesticks, which I'll put a link to at the end of this video, is a bottoming tail. So you end up with basically two bottoming tails that go to about the same price. If it's the exact same price, perfect. If it's a penny off, perfect. If it's 2 pennies off, perfect. If it's 25 cents, 50 cents, $1 off, then you don't have a tweezer bottom. What makes it a tweezer bottom is the fact that these two bottoming tails go to about the same price. It doesn't matter what the candle looks like as far as the body. It could look like this. It could look like this. It could look the opposite, right? It could look like that. That's fine. What's important is we want a bottoming tail on each candle, and we want that bottoming tail to go to about the same price for our tweezer bottom, right? Once the tweezer bottom is in place, the buy trigger is over the second candle. So that's your buy trigger and that's your stop. Again, super simple. You're looking at basically 2 to, it could be 3 or 4, depending on when this triggers. But the price has to move above this candle to trigger, right? If it looked like this and then the next candle was this, then the setup is over. It's canceled, right? It didn't play out. So you never got a buy trigger, right? You broke through the support level that is set up by the tweezer bottom, and you wouldn't enter the trade here, right? It has to move through the top of this green candle. That's your buy. When that buy sets up, that's your stop. Again, super simple. Now let's look at it on a chart, and I'll show you examples. It's not something that happens every day, which I'll show you on the chart. But when it does happen, you have a low risk. So it doesn't have to work all the time, because you can risk a small amount and it's fine to lose a small amount. And when it does work, you get a really nice risk reward ratio, right? You get a large amount for the amount of money that you're risking. So let me show you what it looks like on a chart. This is 6 days of trading on the Qs. And the tweezer bottom doesn't happen every day on the Qs. But if you have a list of 5 to 8 stocks that you're trading, there's a very high likelihood that you're going to see a tweezer bottom on one of those stocks basically every day. So let me show you what it looks like on the Qs, and I can show you a couple of different scenarios. Again, I want to focus on the fact that it's a very small risk. And when this trade works, you get a really nice return because what you're doing is finding the bottom, right? With this Tweezer Bottom trade. So let's look at example number 1 of our 5. In this example, we have a really nice gap up in the market and then a pullback, right? I said you need a downtrend. It can be a very short-term downtrend, and that's fine because what this is doing is catching a pullback after this gap and nice move higher. You get a pullback, you get a tweezer bottom here, and then your buy triggers just above the high of the green candle, the second candle in this pattern. Your buy triggers here, your risk is right around 30 cents in this trade, and you end up with a really nice gain of up to around $2.40 or so, right? So you have an extremely low, again, risk and a really nice return because you're catching, in this case, a pullback in the uptrend, right? You're catching the downtrend or the pullback and you get to move higher. So this tweezer bottom worked out extremely well. Let's look at the second tweezer bottom. So a couple of days later, you get this tweezer bottom. There's the bottom. You have your large red candle, your green candle. Here's your buy signal. Here, as you clear your green candle, and you can see this one doesn't work out so well, right? Your risk is about 60, 65 cents on this one. If you're scalping aggressively, maybe you made a little bit of money on this one, but if you're following just a buy trigger, sell trigger, this one didn't work out. You're going to end up losing about 60 cents. You can also be triggered out on a time basis if you're using that as a stop, in addition to using the bottom of the tweezer for a stop. You may have been stopped out over here for less than the 60 cents, depending on your style of trading and what kind of stops you like to use. But this one, I want to count it and say it didn't work out and say that you lost, 60 cents. So basically, you're up over $2 on one, down 60 cents on the next one. And let's move to the third, fourth, and fifth example, which just happened to be clustered together. So let's look at these three together. The first one, you get a downtrend, you get your red large candle, you get your green reversal candle. Here is your tweezer bottom. Here is your buy signal. You're talking about around a 30-cent risk. Again, if you're being aggressive, this one could have worked out. You wouldn't have gotten a 2R or a 3R on this, but you could have gotten a 1-to-1. So you could have gotten a 1R off of this trade. Again, 30 cents. I'm just going to call it a loss, right? Say it's a loss, right? So now we're up over $2 and we've lost 60 cents and 30 cents going into this. So we're up $1.10 using this trade only over this time period. Now look at number 4 sets up. That's your tweezer bottom here. Again, downtrend, touch around the same price. That's now going to become your stop as you buy here. Buy trigger. And this one you do end up getting about 2R on this trade, right? Your risk is here. And at the top here, it's right around 2R that you get on the trade. So we're going to say we get back about 60 cents on this trade. So that covers the 60 cents that we lost on trade number 2. So now we are up $2 and down 30 cents. So let's say we're up $1.70. And I'm rounding so I can do this math easily. Our next tweezer bottom happens almost immediately right here. This is your buy signal as you cross above this green candle, right? It's 2 candles in this pattern. So again, our risk is around 30 cents. And we end up with a well over $2 move to the upside. So we end up with the opportunity to capture another $2 on the upside. Again, the reason that this trade works really well is because it's catching a bottom, right? It tried to catch the bottom here, and missed, but you had a really small risk. And I do not encourage like catching the bottom, as in buying here and holding, or say you start here, this downtrend, say you buy here, you add here, you add here. I don't do that. Like, that's not my kind of trade, is to buy on these bottoms, but I will buy if I get a buy setup near the bottom with a really defined and controlled risk amount. And that's exactly what this tweezer bottom gives you in each of these scenarios. And then when it finally does, whether you get in on this bottom or this bottom, right? Because remember, in this trade, you're never stopped out. So if you got in here and you're following the rules here of using this as your stop, you're actually in from here. So you captured more than the $2 that was captured from this trade moving higher. So that's the tweezer bottom. Again, super simple. I think everyone should be using it. I use it constantly. I also did another video around candlesticks and 5 sort of more advanced techniques that you can use for candlestick trading. You're just looking at candlestick patterns. And I'll link to that at the end of this video. So if you want to look at that, you can add to your arsenal of candlestick setups by watching that video. In the beginning, I go over very briefly, like what a candlestick is and how it works. You can even skip through the first couple of minutes of that. Then just jump right to those 5 advanced strategies if you'd like. So I hope this tweezer bottom video helped you out. If it did, please hit like and subscribe. If you have questions, put them in the comments. I try to respond to every comment that I get, and I will keep making videos like this showing the setups that I use in my trading and have developed and found over this past 30 years. Thanks again for watching.